Okay, welcome back folks for a live trade case study. What I often find, very similar to my NFP trade, is that when the market drops prior to a news announcement, it's often a manipulation and offers a good opportunity if the high time frame directional bias is in alignment with the particular trade, then it's often a good entry for a setup. Okay, so I'm directionally biased to the upside. I can see that as this market has dropped prior to the news announcement, it has left buy side intact. It's come down into a discount PD array, which is a 4-hourly bullish order block. Okay, and often I see this all the time. And if you look at my last video, which I did on the NFP, the last NFP, I did a live trade case video, and this was the exact same setup. Now you've got to be careful. This is not an invitation for beginners to just come in and jump in. You've got to be an expert. You've got to have done it a few times. You've got to know what you're doing. You've got to have a good, decent account size, and you've got to know how to manage risk. And obviously, you need to know what the overall directional bias is, because often news will trade in alignment with the high time frame directional bias. Now, for me, right now, I do believe that gold still needs to reprice higher. So right now, at this point in time, I'm directionally biased to the upside. Okay, and this to me is just an opportunity to take a long position prior to the news announcement. Okay, now I don't trade large size on these setups. I manage my risk by trading a size that I'm okay if the trade doesn't work out. Okay, that's how I manage my risk in these particular setups, because having a stop loss will often get hit because these kinds of events are high volatility, right? High volatile events. So you can go back, you can watch my NFP trade. I recorded that as well, and this was the exact same setup, and I'm now repeating, because this to me repeats all the time. When I see this setup, then this is when I get interested. As I said, it needs to be in alignment with my overall directional bias, which right now for gold is to be repricing higher. And I need to see various things. I need to see the market dropping prior to the news announcement. I need to see that it's coming into a key PD array. I need to see that it's left a liquidity where I want to offset my position if I do accumulate. Okay, so all of those things are important. Okay, so this is just another example of a live trades case study. Just prior to the news, we have news announcement at 8:30. We have about a minute to go. Now we could still come back down and sweep these lows, but essentially I'm expecting the market to reprice higher into these equal highs and above. Okay, but for this particular position that I'm now, you can see I've taken a long here on this TradingView platform as a live trade case study for this video. I'm going to just take off my profits, maybe a little bit higher. Let me see if I can get a little bit higher than that. So maybe just a little bit higher, up around perhaps 3004. Okay, maybe we can actually tap into the all-time highs. Let's see. So I think that's good, just a little bit under all-time highs. Okay, so I'm just going to let this pan out. It's about a second to go. Okay, so let's go back to a 1 minute chart. News has now been released, and we're just seeing how this pans out. I'm expecting to at least get up to these equal highs and a little bit further into where I've shown you, very close to the current all-time highs. Okay, so this volatility is expected, right? Now this here is a mitigation block. It's an ideal place to add. Okay, so this would be where I would add had this not been a news announcement. Okay, but because of the volatility, I don't want to have any more exposure as to what I've already got on here. I've done the same trade in my own account. Okay, and now I'm just watching the market. I'll let this pan out, and I'm going to go mute. If I need to make any more further commentary, I will unmute myself. For now, I'm going to go unmute, and we're going to be looking at taking off our trade above these equal highs. You can see the TP has already been set. Okay. Okay, now looking at this price action, I am still looking for higher prices. Okay, and looking at the time, which is close to 9 AM, I'm adding to my position. Okay, because I still see buy side liquidity above the market. Okay, where people are shorting from. Okay, it's an inducement to short, and obviously these equal highs, and then the all-time high above there, which I'm not targeting the all-time high, but I'm targeting close to the all-time high. Okay, now some people might say, well, is this gambling? Are you just risking for no reason? Now, it's certainly elevated risk. Okay, when you have news, it's an environment of elevated risk, and so there really isn't a need to trade in an elevated risk environment unless you are very proficient in reading price action. Okay, and understand your market and have some kind of edge in the market. Now, my directional bias right now is to the upside. So for me, any pullback is an opportunity to buy so long as I have a buy setup and I have a clear draw on liquidity. Okay. Now, so for that reason, I have, in my view, a number of things on my side. And for me, taking this trade makes sense. So I didn't trade my full size prior to the news. Okay. I put on a lot size that I was willing to forego if the market moved against me adversely, which it did not. And so now that the news announcement has almost basically settled, and we still have objectives that I feel still need to be met, I'm happy to add to my position because it's still within my criteria of being within the trade, right? For me, the trade is not void. If it was void, I would have either closed it out or left it on and gave it a bit more flexibility, but would not have added. But for me, looking at the price action, having my understanding of where this market's going for today, right, my directional bias, and seeing the draw on liquidity still available, I'm still willing to remain in the trade and also add to my position, okay, based on the time and what I see in the price chart on this 1 minute time frame, okay? So it's more a matter of fact of knowing the market, knowing your edge, knowing your skill set, and having enough chart time practice, expertise, and understanding of price action behavior that allows me to trade these kinds of setups. That still can be wrong, that's okay. And that's another thing, having the right account size and trading relative to a level of risk that I am willing to accept in accordance with my account size. That's very important, okay? I still could be wrong. And if I'm wrong and I do take this loss, which is now an 8 lot, okay, for me, based on my calculations of where I will close the trade out if it doesn't work out, it's still okay. Okay, I'm okay to accept that monetary loss for two reasons. One, it's okay for my account size. I have a significantly large account size, okay, more than the average trader. And I've been doing this for over a decade now and built up my account size, okay, and I have a lot of practice, a number of years, and I'm a full-time trader and I trade this specific market, okay. And number two is that I know with high confidence that if I do take a loss, I can very easily recover that loss either today, later in the afternoon session, or even later in the morning, towards the end of the morning, or on another trading day. So I don't have a fear of losing, although I do want to preserve my capital, okay? So it's not a matter of that a news announcement is always going to be a gamble. No, it's always in accordance with my trade plan. So this is an opportunity for me to get into the market at a discount of my analysis that the market needs to reprice higher. So to me, any opportunity as a pullback, especially when the market moves adversely in the opposite direction to what I'm expecting prior to a news announcement, is for me an opportunity to take a long for that position. That doesn't mean I'm guaranteed to win. I can still be wrong, but I still have an edge. And I'm using the news announcement, that manipulation that I'm expecting as part of that news announcement as an advantage to get into my position at a discount price. Okay, so that's the premise of the trade. So I'm still expecting high prices. We've got buy side here, we've got buy side here, equal high, then we have buy side close to all-time highs as well. Okay, so I'm going to leave the trade on for now. We still could, I'm giving the trade a bit of flexibility because of the news and the time. Okay, we still haven't hit key times for trading the gold market, which is 9:30 or even 10 a.m. Okay, and so far I'm not too concerned about the current price action that I see and the current levels that we are at. Even if we drop down a little bit further, I'm still okay. Okay, but we have now taken out what was the previous New York low. What there, just a little bit. Okay, in the new hour. What this is now 9 a.m. 9 a.m. has taken out the low that was formed in that 8 a.m. hour. Right, so the market has taken out an hourly low. Right, so it's taken some liquidity. Right, I'm looking at all of that. Okay, when I'm looking to add my position, that's why I've added. Looking at the current price action, looking at buy side still remaining intact, equal lows still remaining intact, that all-time high still remaining intact, and really the time is important as well. And seeing this big down movement prior to the news is all manipulation in my view. So all those things are part of my decision-making process. Okay, and then because of the elevated risk environment based on this news announcement, the event itself, I give the trade a little bit more flexibility and a little bit more time to work out. Okay, again, I still can be wrong, and I accept that risk, and I have a way to recover based on my skill set, my account size, and what I can see in terms of price action where this market might be headed. Okay, so I'm going to go back on mute, and if there's any further commentary that I want to provide, I'll come back and unmute myself. For now, I'm just going to remain in this trade and watch this trade, see how it pans out. Now, for those of you who might be wondering what I look at that keeps me in this trade, there's a couple of things. And this is obviously now for those who are still with me, for those who may have already left or they miss out on this important information. So, number one, this shaded area is important because that is a 4 hourly discount PD array. So if I jump into the 4 hourly chart, you can see this down candle currently is being respected by this down candle, which is the current 4 hourly time frame. And you can see how the wick is still within the midpoint. Okay. And then I also look at the 15-minute time frame and I see consolidation, which is what I like, right? So you can see we're just consolidating here and we're at the midpoint of that 4 hourly bullish order block. Notice the body candles are within that midpoint. And I see this on the different monitors that I have. Okay, so while you're looking at this on screen, which is what I'm recording this particular screen, I have different monitors that I'm looking and watching. Okay, and they are the things that I'm looking at, as well as time and as well as this 1 minute time frame and how price is behaving. Okay, so they're the kind of things that I look at that keep me in this trade. Okay. Okay, so we can see that the algorithm has repriced higher for this market, okay, for gold. And I'm just bringing my take profit level down just to be above the equal highs there so that I can close out this trade and get some sleep, because in my time zone, this is quite late, okay, which is one of the reasons I like to just trade the early morning of New York, but almost now New York session is about to close and I also want to close out my trade and just go to sleep, okay, in my day. And you can see this trade has worked out nicely, exactly as anticipated. Go back, rewind the video, look at all the different elements that I mentioned on the reasoning, the rationale for the trade and my overall trade plan and why I added and what I was looking at on the different time frames to keep myself in this position. Okay, so I do these on TradingView on this paper demo trading platform so that I can show it to you live, but I also then execute the same what I'm showing you here on my own account as well. Okay, so everything that I've shown you, I've also done in my own trading account. Okay. Now, let's think about this, because you might still be asking yourself, why would I still be holding onto my position? And again, for those who have left, they're going to miss out this information. So you're one of the lucky ones that are still listening to me and watching the video for more information to provide you with more education so that you can learn this stuff, right? It's because I look at all the different time frames and what's going on. Now, sure, the New York session has now ended because time in New York is now past 11 a.m. Okay, but nothing I'm seeing on the charts is changing my directional bias and view that we are still headed for these highs. Okay, all we've done, remember, the market needs to continuously grab liquidity or balance a level of inefficiency or induce traders into the wrong side of the market. Okay, so what's this move down doing on this 15-minute chart? Well, number one, it's balancing a level of inefficiency. Okay, it's also coming down into these two down candles. Okay, those two down candles make up the current bullish order block where we've had all this expansion. And so to me, this is simply a rebalancing exercise and coming back into these two down candles to grab more orders so that the algorithm can still push up higher, as well as inducing short sellers into the market who think that we now have a double top resistance, right? Okay, and the market will now take them out because now there are more buy stops, more liquidity above these highs. So not only has the market come down to grab more orders and to rebalance and to induce short sellers into the market, but it's also engineered more buy side liquidity. Okay, so for those reasons and my bias, okay, what I see on the charts, I am still holding onto my position. Okay, so I'll now go back on mute. We'll go back to the 1 minute time frame. Let this do its thing. Okay, and I'll keep recording, but I'll go on mute and I'll come back if I need to add any more commentary. Okay, so let me give you the last couple of nuggets for those of you who are still with me. Okay, so lunchtime session is really important, right? So the lunchtime session is typically the manipulation. Okay, so you can see this move down during the lunchtime session, which starts at 12 p.m. Okay, has come back down and to pick up more orders, right, into this bullish order block. So if you don't get a trade in the morning, okay, then there's 3 times in the afternoon that are really good to try and identify a setup. Okay, 1 p.m., 2 p.m. and 3 p.m. So if you look at this time here, this is 1 p.m. Okay, so when you come to your screen in the afternoon, let's say 1 p.m., then you want to kind of understand where is the money. Well, everybody is short, right, from the morning session. Then you want to understand what is the current order flow. We have bullish fair value gaps, bullish order blocks, right? We can see price has been moving up. Okay, we're down here, remember, okay, at this point in time, at 1 p.m., this is the 1 p.m. candle. Then you need to identify where is the liquidity. What is the market trying to reach for? You can clearly see that there's equal highs up here that the market is reaching for, right, when you're down here, right? You've got everybody short, okay, then you've got bullish fair value gaps, you've got these bullish order blocks. You can see the market's coming down into the bullish order blocks as well as the bullish fair value gaps. Okay, it's now 1 p.m., you're down here, and so there's a very clear draw on a liquidity, okay? So that there from, let's say, 1 p.m., is 60 or 70 pips, right? And you can add a bit of a buffer because it's not just going to stop there, it's going to go a little bit further, at least 10, 15, 20 pips to try and stop hunt anybody that's already short from that level. So that's a nice, anywhere between 75 to 100 pips from that 1 p.m. session, okay, with all of the context that I've just explained. You also need to have the overall bias. What is the market been doing up until that time, higher level, high time frame? Well, we know that gold has been bullish. And so everything here at 1 p.m. is in alignment, not just with the current bias for the day, it's also bias for the session and in alignment with the high time frame bias as well, okay? And so that is a great way to identify a setup in the afternoon when you haven't been able to identify a setup or take a trade in the morning of the New York session, okay? So the afternoon session. Now, the market can still come down. We've got equal lows here, okay? So either we will come down, take out this liquidity, and then go back up, or we'll go up and then come back down to take this liquidity. Either way, these equal highs, the liquidity resting above this level will be taken, okay? Make sure you go back and rewind and listen to all the different things that I've said as this trade has evolved, but essentially the premise of the entire trade has been this 4-hourly bullish order block, okay? Regardless of the fact that news brought this down for the dump and the pump, okay, even if it was not a news day, this 4-hourly bullish order block was the premise of the trade, and then time, okay? That 9:30 to 10 a.m. is the key time for the New York session, okay? And then obviously the higher time frame bullish bias, the draw on liquidity with these equal highs, okay? And then just understanding the bullish order blocks and the bullish fair value gaps, okay? So go back, rewind, listen to everything I've said, plot it out on your own charts, look at the 1 minute, 5 minute, 15 minute. I've now switched back to a 15 minute just because the 1 minute just was a bit too messy to talk about what I could see here on the charts. And then think about if you don't get a setup or anything you could identify in the morning session, then the afternoon session should very clearly show you where the draw on liquidity is, where the money is, right? Everybody's short from these levels, so that's where the money is, the stops, okay? And you don't have to get the best entry, the best exit, just from that 1 p.m. entry to that high is a good 70, 80, even up to 100 pips, depending on how much it goes through that level. You can add a bit of a buffer to the highs, maybe 15, 20 or 30 pips, okay? So if you find this interesting and you like what you see, you want to learn how these algorithms work and how you can potentially profit from this type of knowledge, and you want to learn it, well, I invite you to join my VIP community, which is where I teach this stuff with a whole bunch of other students, where you will get these kinds of lessons in this kind of format on video and be able to practice with me on the live charts and engage with price on our paper or demo trading account to be able to learn, right? I'll provide a directional bias for students every day and then commentary throughout the day at each session, as well as real setups to provide students with a way to engage with price, okay? And we go through, this was a setup that was provided to VIP, exactly what you see here, right? Where I said to them, look for a setup to go long at a specific time, right? And for a particular target, which was these equal highs, okay? And we've had other setups throughout the day and throughout the week. And this is what we do. We do it every day, we do it every session, and we do it every week. So if you want to learn how you can trade this market, okay, and be able to do exactly what I've done here today, then I invite you to join my VIP community where you can learn with me. The link to join the VIP community is in the description of this video. I hope the video is useful. I will now talk with you in a future video.